All right, guys, so I want to do a quick little piece, a quick little video on the 8-period moving average, the 13, and their relationship with the 20. It's today's action on AMD on a 2-minute chart. And as we can see, this price action is obeying the 8-period moving average. This negative pressure on this 8-period moving average is pushing the price action down until we get here. I'm going to write it off. Until we get here. At that point, price action starts to push up against the 8. It busts through the 8 here, runs into the 13. As you can see, it tries to bounce off the 13 here, tries to respect it. We even get an inside red bar. I'm going to zoom in so you guys can see. Okay, we even get an inside red bar, inside green, showing that indecision between the 8 and the 13. And then we bust out of that range. So that's not a downside trade there. Now we're in between the 13 and the 20 now. So on a bearish move where the price action, was under the 8, when it finally does break above the 8, breaks to the 13, your last point of defense is the 20. You're looking to see if it's going to bounce off that 20 and continue down, or if it's going to bounce off that 20 and go through the 20. So this was a failed bounce here. It bounced off of the 13, or it hit the 13, it bounced off a little bit, but broke through eventually. So now we're seeing if it's gonna bounce off this 20 or break through the 20. What happened here is we got an inside bar right off that move on the 20. Let me write that off. This bar here bounced off the 20. We got an inside bar. This is the range of that bar that hit the 20. That's the range of that bar. We got an inside bar, and then we broke out of that range. So that can be seen as another bearish trade signal. So you can come in for a bear trade here. We already did the one here at the open. So we had that. The second bar of the day was an inside bar, and then we broke out of that range. So that's a signal to put on the bear trade. And you would ride that trade until you start to bump up against the 8-period moving average here. So that would have been a proper entry for that trade. And enter here, get out here once you run up against that 8-period moving average. And then what you do is you watch the price action. As you can see, the price action, all three of the moving averages start to convene here. This area here is convergence of the moving averages. In these convergence areas, you want to look and see which side breaks out, to the upside or the downside. And to find that, you watch where the price action bumps up against the 20-period moving average. We bump up here, we bump against the 20, we give an inside bar, and then we break out to the downside. So that, after that, that tightening range of the moving averages here, all of this is getting tight. Moving averages are wide, tightening, and that's reflected in the price of the stock. See, when it's wide, we're moving down, moving down. Now we're starting to move up a little bit. The moving averages are tightening. The prices are getting closer together. Volatility is shrinking until we get to this little tightening area here. And we're looking for the next breakout from that tightening range. Since we didn't have enough positivity, enough bullishness to break out of the 20-period moving average, we bounced off and took this move to the downside. And as you can see, let me get rid of that. Kept going down. We're below the 8-period moving average again. Once we're below that 8-period moving average, we started to turn below the 8-period moving average here. So from this point here forward, we're below the 8-period moving average. When we're below it, we stay in that trade. Now, like we said, this was our entry point. After the breakout of this range, this was our entry point into the trade. And now we're locked into the trade. We're under the 8-period moving average. We're locked in that trade, and we stay in that trade until the price action stops respecting the 8-period moving average. So here, we start to bounce up against it. We're already higher than this low here. So this is where you want to get out of this trade. I'm going to mark that as your bottom, because that next bar you get is a green bar. It doesn't necessarily break out of the range of this bar. It doesn't close out of the range, but it did get to that point at some point. But anyway, that is a pretty good size move. You don't really need much more than that. That could be 400, 500, maybe $1,000 move, depending on how many contracts you get. So that would have been a good point to get out. Once we get that bounce up to the 8, price action is bumping up against the 13, breaking the 13, bumps into the 20. Let's see if it bounces off or goes through. It bounces off a little bit. We'll mark off the range of that bar there. It bounces off a little bit down to the bottom here. And now we bounce off the range of this bar. We're out. This could be seen as another opportunity to go long. We've got, let's see here, we've got our 8-period moving average, the purple here. Price action is now above it. We're still above it. We break below just briefly. We break below just briefly here also, but then we start to rise above it, above it, above it, above it, and now we're clearly above the 8-period moving average. We've got an inside bar, so we'll see what happens there. But let me move this back. There we go to the ranges. After that inside bar, we'll see if we can pull that price back up. But that's how, you know, you can utilize the 8-period moving average, the 13-period moving average, and the 20 in your trading. And if you zoom out, you can see that relationship play out. Let's zoom out a little bit more. You can see that relationship play out. This red is your the 200-period moving average. The blue is the 20. And the purple, the pink is the 8, and the yellow is the 13. So you can see that relationship there. This is yesterday's price action, the 29th, all of this, and this is today, 30th. So I'll write it off. It's 29th. This is today. You can see that relationship play out. But that's it for today, guys. I just wanted to give you a quick little video on how you can utilize 8-period moving average, the 13, and the 20 in your trading to find great opportunities to profit in the market. I'll do more videos like this as topics, you know, come up and they need to be discussed. But thank you guys for watching, and I will talk to you the next time. Thanks.